Hey guys, this is Scott Horne. I'm here today with Sara Montes with Texas Pride Lending, and we are your loan processing company. So when you need RMLO or residential mortgage loan origination services, we are here to help you out with that. So Sara, I just want to tell our audience out there today a little bit about the loan processing process, for lack of a better word. Now, what is it, Texas Pride does for our seller lender in these owner finance transactions? How do you start off with? What are you doing? Why are you doing it?
Right. We're here to protect you, first of all. And so what we like to do is we like to collect the financials from the borrower and also send out the loan estimate that's required to show them what the loan entails, the terms of the loan, the interest rate, what the loan amount's going to be, and what the estimated monthly payment is, so that they can make an informed decision to move forward or not. So once they sign that loan estimate saying, yes, I like what I see, I'm ready to move forward, then we'll package it all up into an underwriting package and we'll give you a recommendation letter just letting you know that they have the ability to repay.
I'm going to stop you right there.
Yeah.
So a couple quick things. So these aren't requirements that you and I make up. This comes from like the federal government, HUD, right?
Right.
Here in Texas, the Texas Savings and Loan Administration guys do that. But I really want to comment on what you just said that to me is so important, because half the world, no, I'll take that back, 90% of the world out there that's in this business, they think that you are this end-all of end-all to approve this borrower. You're not really approving the borrower, are you?
No, we're not. We're just giving you all of the information for you to make that decision.
That's the key right there.
That's right.
You gather that financial information.
All of the facts.
You give it to the seller, and they are the decision maker.
That is correct.
You don't have the ability to do that.
Right. We just give you all of the information that you need to make the right decision.
Okay. So, you meet with this buyer. They come online usually, right? So they can most of this stuff online. Hopefully they're proficient enough. And the sellers can help them if they want to fill this stuff out. That's not a problem with that.
We have a phone app now, so it's really easy for them to upload their income docs.
Oh, that's awesome too.
Yeah.
I'm not sure if I knew that or not. Oh, all right. So the borrower comes out. They hook up with you through the phone or the computer or in person even.
Right.
And you gather this information they bring to you. So tax returns, they got them?
Yeah, I mean, pretty much we deal with a lot of self-employed borrowers, so they're going to probably provide 6 months bank statements, which is a lot better and easier than requiring tax returns. But if they have tax returns, great.
W-2s?
W-2s, 1099s, absolutely.
All that stuff? And you get all of that and you put it into this system you've got, and it spits out this great package, right?
That's right.
And you give that to the seller so they can make that decision. So as you go through that, you also give them all these other disclosures, right? What else are you sending to them?
So there's a ton of disclosures that you have to send them. But see, these are required federal RESPA law disclosures that we have to send them. So we're protecting you in that aspect as well, because we're going to make sure they have the equal opportunity disclosures, the credit report disclosure. All of the different disclosures that are needed when someone's purchasing a home, regardless if it's owner finance or traditional, conventional, these are disclosures that are required by law.
I'm going to bring this up real fast. Back in 2012 is when they passed the SAFE Act after the crash of 08, 09. And that is really what created all this, isn't it? Where they said, Mr. Investor, you must provide your borrower these, we call them the RESPA disclosures, Real Estate Settlement Procedures Act. Is it like 36 of them? Is that right?
Yeah.
It's
getting close to 46. Yeah, because you have to give
really
them.
Really?
46 pages.
Holy cow. Guys, I don't know a single investor that wants to do that. And that is really why the RMLO came on the scene in 2012. Before that, this didn't exist in our industry. And because of these new rules and regulations, this new business was created for loan processing. And they're really here to help you as a seller be compliant, because you have to do it. I want to make a point. Here in Texas, there is an exemption if you do less than 3 deals in a 12-month period. You should do it every time, however. I think everybody knows that today. But in every other state, you must process that borrower the very first time you do a seller finance transaction.
That is
There
a
are no
federal,
options.
that's a federal requirement for you to make sure that they have the ability to repay.
Absolutely.
But yeah, as far as like the loan disclosures and all of that, you're acting as a lender. So this is why this is required, is to make sure that you're doing all the things that a lender should be doing. And one of them is loan disclosures.
Yeah. So you get your borrower, introduce her over to Texas Pride, whether you're in Texas or national. They're going to start that moving forward, collect this information, plug it all in. You get the standard application, and then you do the loan estimate, as you said, and it was all the disclosures. And how long does that normally take, you think?
So for us, we move pretty quickly. We do it within 24 to 48 hours.
Wow, that's fast.
Because if the borrower submits their loan application, you send us the contract, the terms of the loan, we have that in a day. By the next day, you'll already have that underwriting analysis for you to look at and make that informed decision. Once you make the decision, we start working with your title company or attorney to get it closed. And so the whole process takes 7 to 10 days.
Sure. So let's talk a minute about that closing process, because there's this little thing called the CD, or the closing disclosure, right? No, it used to be a simple little 2-page HUD closing statement. Now it's this, 6-page closing disclosure that has to have all this information filled out that your system plugs into it. You work with your closing agent to plug their information into it. And then you have to present that to the borrower, right?
That's right. So we present the closing disclosure to the borrower 3 days prior to closing, so that they see exactly what their monthly payment is going to be at the end of the day, what their cash to close is going to be, and all of the fees associated to the loan. So they'll get that final number of what they're going to be bringing to closing, and that has to be delivered to them 3 days prior to closing, so there's no surprises, and they know exactly what's to bring.
And that just to help everybody a little bit, this closing disclosure, this used to be easy, guys, before all this rules and regulations. And now they've taken the HUD, they've combined it with the good faith estimate and the truth in lending document. It's just, welcome to the federal government doing things to us. But it's a mandatory requirement, and they make sure it gets done right.
We're just here to comply. We're just here to help you comply with all the rules and regulations, and we make sure that we're doing all of that for you on your behalf.
Yep. And then along the way, they're going to maybe help you out a little bit with a loan servicing requirement if you're doing a wraparound mortgage, when there might be an existing mortgage on the property. Those are the fraud preventers in our industry. And it's getting this to your settlement agent so they can get this deal closed for you quickly. So really, you're just working with the seller, who's really the lender.
That's right.
You're not the lender.
Right.
They are. You're just I call it a document gathering firm, really.
Processing and underwriting for the lender.
Now, here in Texas, though, we do one thing that's a little bit unique than anywhere else in the country, and we kind of call that correspondent lending, don't we? So, Sarah, one thing that Texas Pride does, different than a lot of people, is you provide this thing called correspondent lending.
That's right. Yep. We can just make sure to keep you compliant again with all the new rules and regulations. Correspondent lending really steps in to give you the full protection.
No, that's awesome, because either they do this or they got to be licensed.
That's right.
And nobody out there wants to be licensed.
So this satisfies the licensing requirement and all the compliance behind it.
Yeah. And again, it's only in Texas you have to do that.
That's correct.
In all the other states, we don't have to do that.
That's right.
In these other states, there's other things that we do and work with the seller lender out there, so that you're able to process and provide them this financial information in all these other states. Is that right?
That's right. So we can give you the underwriting package, the processing services nationwide.
So I got something else. I think, so you go through this saves with compliance, helps them to comply with the SAFE Act, all those kind of things. But sometimes a lot of these investors are playing in the note world, as we call it. They are originating these notes. They're hanging on to them for a year, 2 years, something like that. Maybe they pull them together. So how does processing their buyer, besides that it's required pretty much, help them in that scenario?
So whenever you're going to sell the note, is that what you're asking? Like when they're preparing to, if an investor wants to sell the note at a later date or their entire portfolio, the note buyer is going to require some kind of underwriting package. They're going to require that you did your due diligence, that it's a compliant loan, that it's a qualified mortgage, And so we're certifying that you're creating that qualified mortgage by making sure that they have all of the financials in that underwriting package, that you've actually given them those loan disclosures. All of the things that these note buyers have, they have a checklist, and they're going to require all of these things. So you want to make sure that you have a full compliant package note, so when you're getting ready to sell, that you're going to get top dollar for that.
Yep. So, and by the way, that's the whole reason you do that. You know, years and years and years ago, I called it a pretty package. You know, and this goes back to the 1990s. I know I'm not that old, but you know, we were doing this back then. We were getting the 1003 application. We were getting tax returns or verification of mortgage or verification of employment if available. We were getting 10, all these kind of things. And the word on the street then was it was a pretty package because it was being, it wasn't required, but people wanted to know that you had originated that best, and that this borrower at the time of origination could afford the house, right?
Yeah, I mean, some note buyers want to know what the borrower does for a living.
Yeah.
And if you didn't have that information, then they wouldn't know.
You know, it may have changed since the time you originated, and that's fine, but they want to know at that time it was okay. And it protects the note buyer also.
That's right.
Downstream. But when you do this, guys, as Sara said, if you want to maximize your proceeds on the sale of that mortgage, you better have that note sale, that processing package, in your back pocket, or else they may cut you off in the knees for not having it.
Yes, and then I've been working with a lot of institutional note buyers, and they are flat out declining any note that doesn't have an underwriting package associated with it.
That's right.
So these things are just becoming more and more a necessity for investors that are creating mortgage notes. And so we're here to help.
Yeah. You know, and what they're doing, I think, Sara, is they're really making the seller finance world come into the traditional mortgage world.
That's
almost,
right.
is what it looks to me like a little bit. Just kind of equating the two out. And there's nothing wrong with that, by the way. I kind of like it because the last thing anybody wants to do is to put a borrower in a house that they can't afford.
That's right.
Because they're going to eventually wind up getting that thing back.
So it's all for the consumer protection. This is the consumer protection laws that are protecting the consumer, but again, it's protecting you. Because again, not just for note sales, but if you ever have to foreclose on that property, at least you said you have the facts, and you say, yes, at the time the borrower did have the ability to repay this loan back. And you have some kind of fighting chance whenever you're...
You know, I always tell investors this, you can just hear the argument in front of a judge. Well, they sold me this house knowing I couldn't afford it. All they wanted was my down payment. Man, I can play that over and over in my head.
That's right.
So guys, if you are doing a seller finance transaction where you are selling your home to a consumer, you're going to need to process that loan. Take a minute, reach out to us at Texas Pride Lending. Let us be your loan processing company. If you're working in the note field where you're selling notes, we'd love to help you out with that too, to help you maximize your dollars. So come see us again at Texas Pride Lending or
myrmlo.com.
And guys, we'll see y'all next time.